You guys, can you hear me? Good stuff. All right. So now I just need to share the screen. Hold on. Here we go. So you guys can record whenever you like.
Yeah, sure, should be good.
Okay. So you're good on recording. You're recording now. Perfect. No problem. Okay. All right. Hi everyone. It's nice to be here. I'm Omar. I'm a managing partner at PrudentiaDigital, also partner at C Squared. I'm here to present venture capital building and outstanding primitives in the ZK space. Simple disclosure: none of this is investment advice, per usual. But let's get right into it. So, early stage venture, and in general, how we think about investing in not just in ZK primitives, but in Web3 as a whole. We typically like to condense our framework into three different features: market, the team, and the product. And it is our job as capital allocators to determine whether there is or will perhaps be a market for something, whether that's a particular primitive, an asset class, an infrastructure layer, anything of the sort. We have to decide, we have to make a bet really that there's going to be a market, and that market is going to be much bigger today. And we have to assess per investment whether we think, contingent on there being a market, that the investment that we're making is going to capture a significant fraction of that market. And based on that, we size our positions, we decide whether it's worth the cost of capital to the investment, and so on. From the founder's perspective, this also has to be the most important feature, regardless of how good an idea sounds or how strong the team is or what their background is. If there is no market for a particular feature or for a particular product, the venture is typically destined to fail. So I would say by far the most important aspect that we focus on is whether there really is a market for something. Now, conditional on there being a market, we then look at we look at two things in the following order: a team and then the product. When we look at a team, we're not just interested in how technically competent they are, because they have to be, or what their business acumen is, because again, they have to have some. We also look at what uniquely enables a team to deliver on their vision. And we know, especially in the early stage side of venture, we know that the vision will change a lot, and there's going to be a lot of hurdles along the way, including sort of internal and external frictions. We have to be able to make an assessment that the team is a good fit for themselves and is a good fit for us as a firm, but also that we are a good fit for them. So there is a way in which we can all work together to build the enterprise, to take it to market, to help grow the team, and so on. And in many cases, this is very difficult to determine from the outset, but you have to have a framework in terms of thinking about it. And the way we like to think about it is, again, what uniquely enables this team to tackle this problem. Once we've already agreed that this is an important problem, we need to decide whether the team is the right fit for it. And then suppose that's the case, we then ask ourselves, okay, can we really work with this team? What can we offer to them? What can we bring to the table that will perhaps be helpful? Again, it's also not always very clear how to do that from the outset, but with experience, usually you see a lot of recurring patterns. Finally, and this perhaps has to be the most difficult part, because in early stage venture, it typically isn't even there, and that's the product. The vision for the product, while it's important, we recognize that it almost always changes, and in fact, we think it's probably a healthy sign of ideation when people change the vision of the product earlier on through iteration and through prototyping very quickly and seeing what, heuristically, what works, what doesn't work, and continuing to iterate on the product. But the point I want to emphasize here is that very rarely in early stage venture is the product there or even clear. So we rely heavily on the team to try and address the problem, and it falls. I would say the product vertical falls on our lowest priority only because of that. It's typically either non-existent, or when it is, it will change dramatically. Moving on. Here, I just want to outline a few of the steps that one goes through when building a product, a few here relevant to Web3 more than anything. Like I mentioned before, the hypothesis and outlining what's the problem to be solved has to be at the forefront of our thinking. Many times we go into a deal and we see the solution or the perceived solution, but never really a discussion of the problem, or never really a first principle reasoning about what the problem is. I found from experience that when the problem is very clear, the practicality of a solution can be evaluated very easily and very quickly. You can say, well, this seems reasonable, it doesn't seem reasonable. But in the case where the problem in and of itself is not clear, and what I mean by clarity, I mean both quantitatively and qualitatively. So qualitatively, just being able to describe what the problem is, and quantitatively putting numbers to what the gaps, if we're talking about, let's say we're trying to solve a slippage problem on a DEX. I have to be able to very easily quantify or quickly quantify what the average slip is, what kind of execution parameters people use, and what I think the gap to be filled is. Just saying that, I'm going to generically work on the slippage problem on chain is perhaps not enough, because it will not provide sufficient constraint to the practicality of the solution. Once that's done, you look at a preliminary design, and I really mean nothing more than just a back of the envelope sketch of the solution. And once the problem is clear, you'll be able to run through many, many iterations of the design, and then take it through a feasibility study, or perhaps even an MVP. And I highlight here this idea of iterating and pivoting often. And what I mean by that is the hallmark of a good design is one that you can iterate on and change its structure depending on a recursive loop between the solution and the hypothesis. You go back and you say, well, I've outlined a particular architecture, or maybe I've sketched out a particular architecture that I think is going to help me solve slippage in AMMs, for example. And then I go very quickly and I do a back of the envelope calculation and see whether that sort of is reasonable. Now, feasibility studies can go anything from very, very simple algebra to relatively complicated mathematical simulations. But in the end, it should give you a feeling as to whether the solution is approaching the desired one, or you're just optimizing or solving for something completely different. And in many cases, it happens that we think we're designing a solution for one thing, and we're not really honing in on the target. We're actually solving a slightly different but related problem. So again, it's very important to go between the first three steps: the hypothesis, the preliminary design, and then going to a feasibility study, and then iterating. Once that's done, you are perhaps ready to think about not just the solution, but now an enterprise build around the solution. So regardless of the technological framework that you've now designed, and you said, I think this solves this problem, or it tackles the hypothesis in a meaningful way, how do I build a business around this product? And this has to be the most important part in the slide. And I say this because not all good products can be monetized, and many a bad product can in fact be monetized. So, and ultimately, as an investor, as a capital allocator, this is where you stand. You have to ask yourself, okay, can I allocate in this, and can I allocate capital to this venture, and can I make money on my investment? And it stops with the business model. And we typically see an early stage venture that many times this model is not clear, or perhaps it's not even like identified at all. And it's okay if you're still at stage 1 through 3, the hypothesis stage, there's a preliminary design and feasibility. But once you are happy with them, and once you are ready to go and try and raise capital, it is extremely important for you to have a business model in mind, and it has to be it has to undergo some sort of scrutiny. And we call this a sort of sensitivity analysis. So you say, suppose my first year of operation on the product, it's going to cost me this much to get to let's say an alpha version. I'm going to monetize this aspect of it, and these are my revenues, these are my costs, this is the P&L. All of these have to be reasonable, and the success of the enterprise can't be sensitive to 1 or 2 parameters. It can't be very sensitive. You can't say, well, if my burn rate changes by 20%, this is a completely useless enterprise. And if it increases by 20%, then this will be the most successful product or most successful enterprise ever. They have to be more robust than that. Once that is clear, and this is now relevant to Web3 only, this idea of, should I think about the enterprise in terms of equity? Is it a company built around a network, or built around a product, or built around a protocol? Or should I start thinking about the protocol itself? And will there be a token? And the token is just a way to incentivize users to behave in a way that they wouldn't naturally do. Will it be useful to have a token? And if yes, then it's a completely different animal, and we open up the discussion and the Blackboard space to talking about, how does one design a token economy? What is the token useful for? How is the token incentivizing users to behave in a certain way? Is this exactly the way I want users to behave? And we've seen from many, now a few years of experience, that many times the initial design of the token and how people expect the user to behave in response to the circulation of the token is very, very different than how people actually behave. This idea of people gaming the system, it simply refers to the idea that the mechanism design was not tight enough, or not all aspects of tokenomic aspects were sort of considered or were imagined. And the reason I think this is important is because one has to clearly outline where the money is going to come for to the business, and how the protocol is going to be self-sustaining. Now, all of these can happen without the existence of a token. All of Web2 businesses fulfill that exact criterion without the existence of a token. But the token is an additional layer of incentives that can cause a protocol to be more sustainable or less sustainable, really depending on how it's designed. So it's extremely important for that to come in the calculation once we've decided, okay, we're going to build a business around this particular product, and there perhaps is going to be a network of agents that's going to interact with this product, and I want to incentivize them in a certain way. So now onto the third part, and the part that's certainly relevant to this hackathon, ZK primitives. And I'm sure by now you've been exposed to many cases in which ZK primitives could be interesting, but the ones that we're typically excited about are privacy. So this idea of obscuring your identity, or having an identity that's not necessarily related to you in person, but only related to your on-chain identity. Obscuring transactions or your associations or your interactions with particular dApps or smart contracts in general. And the reason that's important is because that is how we live today. We do not see a prospect for the world in which everyone's full interactions, financial, non-financial, and their capital account balances, these things are completely visible to everyone. It's certainly not how we live today, and it's probably not how we're going to live in the future. So there needs to be this layer of privacy, whether it's either like embedded natively on chain, or it's sort of an added layer to the chain. Both, I think, are extremely important. Another aspect, which is quite interesting, and it's what you guys are building here at this hackathon, is related to gaming. This idea that you can, for example, very efficiently generate worlds with very specific features very cheaply, and it only costs you the proof of validation. This idea of non-deterministic gameplay, so even the designer of the game knowing everything about the construct and the code cannot predict the outcome of the game because of this idea of non-determinism. And a third very interesting aspect is markets in general, this idea of differential privacy. So if I come to a group of agents that are trading with each other, I can actually say something about their statistical behavior, not individually, but as a group. And you can think about how that's important, that you can use that to constrain toxic order flow, this idea that you can be front run, or that you can betray certain aspects of what you think about the underlying by trading. You can sort of protect that using differential privacy in general, or this idea of private order books in general, again, to prevent sort of front running. And on the last slides, I show a few examples, and I got this actually from a Pierre on Twitter, which is a very nice thread. But he talks about a few examples that are very nice, both using snarks and stocks. One is ZK Testa, the other is Hayanon, Doc Forest, and Zero X Park, which the last two I assume you're very familiar with. They're OGs in the ZK gaming space. And they're interesting. The repos are all public. You can go look at them. ZK Testa is a very, very simple primitives. All it allows you to do is you can generate a proof of ownership or past interaction based on the Ethereum state, current or past, at any given point. So you can say, without revealing what exactly that you did, or in terms of the interaction, or how much you own, you can say, by the way, I can demonstrate to you that I've owned this or interacted with this contract without sort of doxing myself, and using a very simple proof. Another similar one was Hayanon, which is on Discus GitHub. You can actually generate a proof of interaction of the DAO before the ETH DAO before the 2016 hack. So you can actually show where you were before the forking of the chain, and I call that sort of proof of provenance, that you were there. Dark Forest, which is extremely interesting if you haven't played around with it before. They have these Perlin noise circuits that allow you to generate pretty much arbitrary on-chain worlds, and it only costs you, like I said, a proof of verification. One of the OG ZK gaming libraries that you should probably have a look at. And the last one is Circum ECDSA, which comes from the Zero X Park, and you can, as an individual, you can prove that you own the private key of a single or a group of addresses. Obviously, that's the idea of signing any transactions, but you can also prove like proper ECDSA verification on any pair. So again, it's a proof of ownership. And of course, there are countless. If you go onto these GitHubs, countless of examples. Really, really interesting libraries on Cairo and on the Starkware GitHubs as well. If you go to Cairo Lang or the Starkware GitHubs, you'll see a tremendous amount of examples. And if you'd like to talk about any of these, or you're building new primitives, new schemes, any sort of clever maths, would love to talk. Reach out on Telegram, reach out on Twitter. Our handles are right here. And I look forward to chatting with you all and looking at what wonderful things you built this hackathon. So. Thanks for having me, guys. Cheers.